10 reasons to invest in gold. There are far more to list, but these reasons cut to the core of gold investing. To learn about all 10 reasons right now, see the link in the video description to read the full article. Also, I will share 2 sound gold investing options, each with their own unique advantages. Be sure to watch the entire video so you don't miss them. If you are unsure right now how your net worth or savings stack up against inflation and the average age of retirement, see the link in the video description to access the free inflation retirement calculator. Reason number 4, gold is significantly undervalued. Money supply growth. Governments worldwide continue to print money at an unprecedented pace, which devalues currencies and generates inflation. The gold Dow Jones ratio. This ratio helps us evaluate gold's long-term valuation. When the ratio is between 1 and 2, gold is considered properly valued. Currently, it stands at 17, indicating that gold is significantly undervalued compared to stocks. Historical investment levels. Gold doesn't currently reflect its historic investment levels. A mere 1% of global savings is currently invested in gold, whereas historically, the average investment has been around 15%. Given this fact, if that 1% increased even just 1.5%, this would dramatically increase the value of gold. In a crisis, this is very much a likelihood. As you can see, gold's current undervaluation presents an ideal opportunity for retail investors like you. Reason number 3, some issuers of gold-related financial products may not have the claimed amount of gold. Is physical gold and gold investment products equal? During your research of gold investment options, it's crucial to understand that not all issuers of gold-related financial products such as ETFs, gold certificates, and futures actually possess the amount of gold they claim to have. Many issuers have sold more paper gold than they have physical gold in their vaults. This discrepancy raises the risk of counterparty default, which could lead to significant financial losses. To navigate this potential pitfall, it's essential to adopt a strategic approach. Rather than investing blindly in gold-based financial products, conduct thorough research into the issuer's actual physical gold holdings. Verify whether the issuer's claimed gold reserves align with the amount of paper gold they have issued. This due diligence can help you evaluate the issuer's reliability and the potential risk of counterparty default. Also, is the contract with the gold investment product you chose allocated or unallocated, such as an LBMA gold forwards contract? If not, is there an option to have physical gold allocated to your contract? How much actual physical gold is being held versus the amount of open interest contracts outstanding for that specific investment product? These are all basic questions that need to be considered when investing in this space. It is also beneficial to consider other investment strategies that can limit your exposure to such risks. Investing directly in physical gold that you own in your name is one such strategy. This approach offers several advantages. First, you have assurance that the gold that you invested in actually exists. The investment has a serial number or other such identifier and can be verified in person. Secondly, you'll be free from the counterparty risk that is inherent in paper gold contracts. As the demand for actual physical gold continues to rise, the risk associated with paper gold investments could potentially increase. If the other open interests or contracts of the specific gold investment you chose demanded allocation or stood for delivery, would you actually receive your physical gold? If the number of open interests or other contracts is 100 times the amount of physical gold being held, not likely. Therefore, it's critical to remain vigilant and strategic in your gold investment decisions. By doing so, you can leverage the benefits of gold as a store of value while minimizing your exposure to potential risks. When starting on the path of gold investing, working with a credible and trustworthy precious metals vendor is key. Finding an established gold investment company that understands the many fluctuations of the gold markets and the numerous variables affecting its price will save much time and hassle. Armed with experience and institutional knowledge, these companies can assist you with logical price entry points, positioning, and dollar cost averaging so you can maximize your gold investment. Gold IRAs provide additional benefits compared to merely buying gold from a local dealer. These companies can provide access to competitive prices, transparency, price match guarantees, a sound buyback policy, reliable customer service, and robust security and protection of your precious metals. See the links in the video description to find the right gold IRA company for you. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. Thank you for watching.